Hello and welcome to CRU's weekly Ferroalloy Roundup. I'm Alex Anderson, and today I'm joined by Greg Smart and Estelle Tran to give an update on recent activity in the European and U.S. bulk alloys markets. Greg, I know that there's been quite a bit happening, particularly in the European market where it's been a little bit more liquid. So what have you been seeing?
Yeah, thanks, Alex. It's been quite a volatile few weeks, especially in the ferrosilicon market, where we've sort of seen the largest decline in the last few days and few weeks. As you can see from the chart there, the ferrosilicon price in the darkest colour, the black colour, we saw prices actually come up quite strongly at the end of the last year, and this was because a couple of large producers and various other smaller producers have made quite significant cutbacks to production, which supported prices and tightened the spot market. So we saw prices sort of come up the end of last year as there was a little bit of restocking, and then into the new year as well, when we saw further restocking in January and February period. Then what actually happened is the COVID-19 outbreak and the subsequent lockdown in Europe saw a lot of steel capacity and steel production taken offline, and sort of this really hit spot demand for a lot of alloys, including sort of silicon alloys and ferrosilicon. So we saw then prices sort of halt their rising and come off just ever so slightly as there wasn't as much spot demand. But what's happened at the same time is on the supply side, the European producers that cut down have actually sort of ramped up their production again, because they have access to sort of cheaper power costs in certain parts of Europe. So this has encouraged them to sort of ramp up output. There's also been some producers that have actually switched from producing manganese alloys because of the high manganese ore prices to producing more ferrosilicon. So we've actually seen a little bit of extra supply coming from those quarters as well. So this sort of absence of demand and increase of supply has meant that a lot of people who are holding higher cost inventories, traders and the like, have been looking to sell their material, and they've been quite aggressive in making those sales in the spot market, which means prices have actually come under significant pressure. You can see the sort of drop off in prices there over the past month or so has been quite dramatic. And then a similar sort of story really on the manganese alloys on side. High carbon ferromanganese, silicomanganese prices were increasing at the beginning of this year, January and February, as we saw sort of people coming into the market to restock. There was actually then another sort of rise around the end of March, beginning of April, and that was quite a sharp rise when the lockdown measures in South Africa were announced, and people were a bit concerned about sort of future manganese ore and alloy supply from the region. We actually saw some buyers come into the market and actually purchase material just as the lockdowns in the steel sector started, and this was just so they had some material to hand in case the lockdown and the picture in South Africa looked more severe and there was a lockdown over a longer period. At the same time as the lockdown in South Africa, obviously there was a lockdown in India as well, so any supply of sort of silicomanganese from India into Europe was cut back as well. So we saw sort of the market tighten a little bit in Europe, with also demand from the Middle East coming in and buying some European material. So we saw a real sort of boost there. However, this has now seen sort of quite a dramatic correction. Prices have come back down to where they were at the end of March, beginning of April, and we're now hearing that demand is really struggling in the market. There's literally nothing there for people looking to buy spot material. They're taking most of the material from long-term contracts, and they're also kicking back their sort of quarterly requirements from Q2 to Q3 and renegotiating some of their formula pricing. So the market again is coming under pressure, and the outlook is pretty bleak at the moment. Obviously difficult to really tell how things are going to pan out with the uncertainty in Europe. Obviously a lot of manufacturing, industrial sort of production and output is coming back slowly online, but we haven't seen this have any sort of impact yet in requirements, and it's having no real impact on the spot market yet.
Sure, thanks, Greg. Estelle, what are we seeing in the U.S. market? Has it been sort of a similar story?
Yeah, thanks, Alex. Yeah, it is kind of a similar story. As you know, the U.S. market for bulk ferroalloys isn't as responsive to global pricing changes because of the strong preference for long-term contracts. But products like silicon manganese, which aren't as actively traded in the U.S. market because steel mills prefer to fix long-term contracts with their regular suppliers, those are starting to edge down a little bit right now. That said, so there was some upward momentum at the beginning of the COVID-19 related South African mining closures, which pushed the high of our silicon manganese range to 56 cents per pound. However, with the steel mill capability utilization falling from the mid-80s to where it is right now, around 53%, it's undeniable that there's just more supply in the U.S. market. So recent business that we've captured has been around 53 cents per pound. The ferrosilicon market, which had been extremely strong this year, because of the furnace closures that Greg talked about in Europe, and also in Malaysia, and flooding in Brazil, those reduced the import supply to the U.S. market. But our index had strong gains in February, March, and April. But in early May, we started to see signs of weakness because of lack of demand. We're now hearing deals in the low 90s and maybe even upper 80s possible. This is because of cheaper Brazilian offers that have been pressuring the market and prompting traders to sell at lower levels. The exception to this negative trend possibly is high carbon ferromanganese. In the U.S. market, as I said, did not see the upward enthusiasm, that major upswing that Europe did on the backs of the South African and Indian mining closures. There have been some truckload deals and intertrade done in the low 1200s per long ton. But with little spot demand right now, we aren't really seeing those representative deals concluded in the market. So, and then in general, market participants are watching this month to see how the auto manufacturer restarts that are planned this month go. The OEM shutdowns that started in mid to late March because of COVID-19 led a string of blast furnace and EAF closures in April. I guess a lot of those EAF closures were also related to the crash in energy prices and oil prices. And the auto sector, which is key to U.S. steel makers, if those are able to restart successfully, we expect there to be some rebound in capacity utilization from the steel makers. So that's all I have. Back to you, Alex.
Sure. Thanks, Greg and Estelle, very much for those market insights. For more information on what's happening in the ferroalloy space, please be sure to read the full CRU Ferroalloys Weekly Review that's delivered to your inbox.